Okay. Hi, everybody. My name is David Waxman, and I am pleased to have a fireside chat here with the famous, infamous Brian Kelly, uh, a venture capitalist, a hedge funder, a trader, and one of the best analysts on Wall Street. You see him very often on CNBC. Uh, we both want to say thank you to Mo and everyone here at the North American Bitcoin Conference. It is fantastic to be with you here virtually this year. Next year, we'll definitely be down to be in person. But here we go. We're here to talk a little bit about institutional crypto and specifically institutional Bitcoin. So Brian, let me ask you this. You're asked all the time, do you think that Bitcoin is here on Wall Street, that Wall Street's taking it seriously?
Oh, for sure. So first of all, good to see you, David. Hopefully next time we see each other, it'll be live in person. And it's great to be here at the North American Bitcoin Conference. And again, looking forward to maybe some warm weather for next time we're together. But yeah, listen, in terms of where the institutions are, they're here. They're here. They're not 100% here. But over the year, over 2020, the events of 2020. And let's just separate them from, the horrific virus events, but, the monetary response is what really kind of got the institutions in this year. And so, I would say probably the biggest catalyst for institutions was the Jackson Hole meeting that the Federal Reserve had in August. And they always use that, the Fed always uses that to kind of introduce new policy, throw a couple trial balloons up there and see what's going to happen. And really what the takeaway from that, at least for me and from a lot of other institutions that I talked to, was that, the Federal Reserve, the Treasury are going to continue to print money until this goes away. And it's going to be a long, long time. And so, when that happened, I can just tell you from personally, more people on Wall Street that I know called me and said, okay, it's time for us to get in. We're in personally, but we're getting our institution in. This is it. We finally see the reason why you want to own some Bitcoin, as opposed to just pure speculation. But it's a hedge against money printing. It's a hedge against the end of the debt super cycle. It's a hedge against we'll see what happens this year, but potentially currency wars. And Wall Street institutions globally are really starting to see that.
So if that's the case, if this is Bitcoin as a safety instrument, it's very different than looking at it as a speculative high yield product, right? This is a totally different way of viewing Bitcoin from the way that banks have previously looked at it today.
For sure. I mean, this is the narrative of digital gold has taken hold. And so people are starting to look at what the market cap of gold is, and then looking at Bitcoin and saying, okay, if Bitcoin's going to disrupt gold, how big can it be? So people understand that there's that speculation. But really up until this year, when institutions looked at this, the speculation was, hey, is Bitcoin going to survive? I'm making a bet on whether or not this thing's going to be around in 5 years. That speculation is over. I think the jury has come back and said, Bitcoin is here to stay. That's what every institution is telling me. And so therefore, if Bitcoin is here to stay, then we need to have some kind of position in that. Or we need to have a reason why we don't have a position. And I think, earlier this year, we saw Paul Tudor Jones get into it. And really, that put a lot of people on notice. It did a couple things. Number one, it took the career risk out. So, back in 2016, 2015, 2017, when I went to an institution, there's usually one or two people at the institution that were advocating for Bitcoin. But their biggest fear was, well, if we get into this and it goes up 100%, we're only going to have a 1% position. It's not going to be that meaningful. But if it goes down, I lose my job. So that was the career risk. Once Paul Tudor Jones came in, it was, well, Paul Tudor Jones is in it. We've got to be in it. And you didn't have an excuse. You couldn't ignore it anymore. So you had to say, I'm either in it or here's why I'm not in it. And that kind of dramatically changed over the year. So the institutions are here. They think it's going to last. The speculation now is how big can it get relative to gold? And to put it in Wall Street jargon, it's really become this relative value trade. Bitcoin at, what is it, I think 700-800 billion in market cap now, gold at roughly 10 trillion. Are we going to close that gap?
I mean, that's a full order of magnitude plus. That's an enormous gap that can be breached. And that's just Bitcoin we're talking about here.
Right.
And that's Bitcoin simply as a store of value, whether or not it's going to be used in another way. I mean, there are certainly gold-based derivatives, but it certainly seems that smart contracts, there can be all sorts of fun things built on or around Bitcoin.
Yeah, it's absolutely right. I mean, the store of value digital gold story is step one, and so people are just starting to get into that. And people are starting to compare it to gold and look at that. But there is just so much more to this entire story. I mean, this is a brand new financial system with Bitcoin at the center. Bitcoin's your reserve currency. And so it makes sense that's going to be your first one in. But like you said, smart contracts, decentralized finance, all these things are starting to bubble up, which is really kind of the true, to me, promise of Bitcoin or cryptocurrencies in general. Is really starting to come, is really here with real products, real things that people are using, billions of dollars invested in it. Wall Street's unaware of that right now. I've always been of the, people have said to me, well, BK, this can't be a currency because it's got to meet all three criteria: the store of value, the medium of exchange, and a unit of account. Well, that's fine. I agree. It does need to do that, but it doesn't need to do it all at once. It can do it in stages. So let's get the store of value going. It's got to be a store of value. Otherwise, nobody's going to use it. Now, what we're seeing is nobody wants to let go of it. It's, what is it? It's Gresham's law that good money is hoarded and bad money is spent. So what you're seeing right now, people are hoarding Bitcoin and they're using fiat to buy stuff.
All right, so let's talk about that for a little bit.
Yeah.
Let's talk about that because that certainly seems to be the case. The 2017 run-up of Bitcoin that peaked at almost 20,000 US dollars, many people have said that was led by retail, a lot of retail demand. It seems on the surface, Brian, maybe you can let us know if this is true, that this is a much more institutionally led bull run to date, that the investors here aren't all going to trade out at the first notice of any volatility. Is that true, or is that just us dreaming?
No, I think there's some truth to that. I would say that institutional investors aren't immune from FOMO like retail investors. That being said, the people that are buying it today, they are taking a longer-term, multi-year view. You look at Guggenheim, right? They're putting some of their funds into it. That's a multi-year view on this. Add into that, let's talk about the treasury positions that Square has put on, MicroStrategy has put on. Those are long-term hedges against inflation, but those are unlikely to be the type of person that if it goes up another, if it goes from 40 to 80,000, it's unlikely that those companies are going to dump it. They're just going to hold on to it. And I think the difference between now and 2017 is that we have much stronger hands in this market.
So what does that mean for the retail out there, the retail audience? People who are maybe for the first time buying Bitcoin, they've seen it pop up on CNBC perhaps, and they're going to Coinbase and they're buying, their first Satoshis out there. Right. For them, what should they make of all this institutional noise? Does it mean anything to them?
Yeah, I think it does. It means that you have strong hands in the market. That doesn't mean we're not going to have a lot of volatility. Bitcoin can still have several days where it goes down 20%. But it does mean that this bull market has a stronger foundation than the 2017 bull market because of these stronger hands. What I would say to those just going out there, number one, you don't have to buy a full Bitcoin. I know everybody likes to do, I want to buy one Bitcoin. You don't have to do that. You can buy any amount. You can buy $2 worth of Bitcoin if you want. And the institutions are just starting. So we're early innings on this. I mean, we have 2 or 3 Fortune or public companies that have Bitcoin on their balance sheet. There's thousands of them. It's still early innings.
So with that in mind, what are when you say the infrastructure decisions, the infrastructure that's been built over time that's allowed Bitcoin to be an investable asset by these big institutions? Is it custodians? I mean, we've certainly heard a lot of noise in the news about that. What are the other things that had to happen for Bitcoin to be institutional grade?
Yeah, so custodianship, number one. That was the number one question I got in 2017, and that problem's been solved. There are multiple custodians. Fidelity, Coinbase does it, BitGo does it. Multiple different qualified custodians, which institutions have to have to hold this. So if you're an institution, you can't hold Bitcoin on a Trezor, on a thumb drive. It's actually against the law. You cannot do it. So now that we have that solution, it's pretty easy for institutions to get in. That's number one. Number two is the liquidity profile has improved dramatically. You have as many market makers in Bitcoin futures as you do in gold futures, or almost as many, which is remarkable. Bitcoin's turning over hundreds of millions of billions of dollars a day in trading volume. So, when I started back in when I first bought my first Bitcoin in 2013, if you put a $50,000 order in, that was big. That would take a couple hours to get done.
You can move the market with that.
You could move the market with that, right? And even in 2017, if you went out to buy $5 million of Bitcoin, that was a huge thing. Today, you can buy $5 million worth of Bitcoin with a push of a button. So the liquidity profiles change dramatically, where institutions can actually get a meaningful position.
And so with that in mind, actually, I remember a conversation you and I had maybe 3 or 4 years ago, where you mentioned that there was a cap on how large a fund could be created to invest in the digital asset space. That any more than that, there simply wasn't a real way to invest, whether you move the market too much, there's not enough liquidity. Does that challenge still exist? Have things evolved?
Yeah, things have evolved, but the challenge still exists. It depends on how how active you want to be as a fund. So a fund like mine, we're relatively active. At some point in time, we will likely close the fund because we just can't take any more capital. That's a great problem to have, don't get me wrong. But in general, the liquidity profiles change so much that if you're an institution and you want to buy $100 or $200 million worth of Bitcoin, that can be done very, very easily. What I would have told you 3 years ago when we talked was that if you wanted to buy $1 million worth of Bitcoin, you could probably do that. So, 100-fold increase in liquidity parameters has made a massive difference for institutions.
And you mentioned earlier that Bitcoin may not today have all the parameters or meet all the parameters of a currency. Does Bitcoin need to be something you buy a cup of coffee with, in your view, for this to be valuable to institutions?
No, it does not have to be. I mean, if we look at gold or silver for that matter, I've never bought a cup of coffee with a bar of gold. Maybe you, David, I don't know. You carry around bars of gold, I'm sure, but not me. So I don't think you have to. I don't think it has to be. It would be nice in terms of, I think it would really expand the success of Bitcoin. It would certainly reduce a lot of the volatility because now you remember you're going to have merchants in there hedging just like you do with the foreign currency markets. So that would tamp down the volatility, which for a trader like me, it's not that exciting. But, I've always said that, we're going to go through this period of accumulation with high volatility. And then there'll be a point of time that traders like me that like the volatility are going to get bored. I'm not bored yet, but someday that'll happen.
Thanks for that, Brian. So I have to ask, we've been talking a lot about Bitcoin, and yes, this is the North American Bitcoin Conference, but at this conference, we talk about more than Bitcoin. And I do wonder if institutions are buying Bitcoin today, if they're holding Bitcoin, if they believe in Bitcoin, might they also believe in other digital assets too? Because many of us who joined because of Bitcoin have discovered Ethereum, and we've discovered perhaps other things in the blockchain space. Is the same thing going to hold true for institutions?
Yeah, I think it will. I think it's going to take a little bit of time. We've always talked about Bitcoin being the gateway drug. So you get in a little bit, you kind of get curious, you dip your toe in, and then you start to look at what else can go on in there. For me personally, Bitcoin will always be my first love. That's what got me into this. I will always look at Bitcoin as the cryptocurrency, as the premier cryptocurrency. I think the case can be made that it'll be the reserve currency of the decentralized financial space, or DeFi. But I think when institutions start to realize that there's more there that you can do with this technology, that they're going to start looking and say, oh, well, let's try out maybe lending. Let's try out these new derivatives markets. We're very, very early. So as an investor, it's a great time to be in that. From being able to use them on a day-to-day basis, we're very, very early in that, but it's a really exciting time. And I think institutions will ultimately want to be in that space and look beyond Bitcoin.
So let's go into a little bit about DeFi here. You mentioned it a couple times so far. It seems like something you're really excited about. DeFi, of course, has took kind of the Ethereum world by storm in 2020. A lot of DeFi applications came, boomed, and have been incredibly successful so far. We've seen real activity for the first time on decentralized exchanges. Do you think DeFi is actually going to make a difference outside of us crypto nerds?
I do. Yes. I mean, this is the promise of a decentralized peer-to-peer financial network, is that I'm able to flatten out the financial world by removing the intermediary, by using software to replace what human beings have done for centuries now, frankly. And to me, that's why this entire space is probably one of the better investments. In fact, in my view, it's one of the best investments that you can have out there, because we haven't had a disruption of the financial system for almost 600 years. I said this a long time ago, but Bitcoin and blockchain technology and the new business model of blockchain plus a token is probably the most disruptive innovation in financial history since the Medicis invented double entry accounting 600 years ago. That's the type of change we're talking about here, and it's early innings.
So again, what does that mean for me if I'm a new entrant to the space? A lot of this seems scary. It seems complicated.
Yeah.
Do you have a recommended way that when you're telling perhaps some of these CEOs that you're talking to, maybe who want to endeavor a little bit deeper than Bitcoin, how are you guiding them?
So there's a couple ways you can do it. Is Bitcoin is relatively easy to get involved in with right now. When you start, and Ethereum for that matter is actually fairly easy to buy. When you start getting beyond that, it does take a bit of expertise. We're still at the point in time where you need an expert to kind of guide you through this. So there are funds like mine that trade the top 20 to 25 cryptocurrencies. We also are involved in DeFi. So if you want to go that route, you can go a fund route. The other thing I would say is, if you're looking at Gemini or Coinbase or wherever you're buying a cryptocurrency, look at one or two of those currencies that you don't know anything about and do a little research on them. Try to find out what's going on. There's a lot of resources out there. I'll mention a couple that, some I have investments in, some I'm just fond of, but, CoinDesk is a great resource. Messari is fantastic. And just full disclosure, I'm an investor in Messari, but they have some great kind of one-pagers on these cryptocurrencies. So if you're a do-it-yourselfer type of person, that's a fine way to go. Otherwise, there's plenty of fund options out there if you want to be involved.
So let's talk a little bit about your venture investing. You mentioned an investment in Messari. You've made other high-profile investments as well. As a VC, when you're looking at this space, there seems to be a lot of noise out there. How have you and your team helped separate the wheat from the chaff?
So that's a good question. I mean, to call me a VC is almost a little insulting to VCs because I'm a bit more opportunistic when it comes to venture capital. So the way we look at it is, we tend to focus on the things that we know. So we're very good at trading markets. My entire team comes from a financial markets background. So that's why we like kind of DeFi. We look at things that we know. The few things that I look at are, what is the product? There was a period in time in 2017 and 2016, there was no product. I mean, these things, whether it was a token deal or whether it was an actually equity deal, they're being sold on a white paper in a dream. I would just say to investors out there, don't do that. You got to have a real product. Treat it just like any other investment. Treat it like a business that you want to buy into. That to me is for me, how to be successful venture capital. Is this a business that I want to go and look at? If you're buying a burger franchise, is this a burger franchise I want to be at every day, flipping burgers? If you say yes, then great, then invest in it at that point in time. But I guess for me, maybe it's the old Peter Lynch kind of approach. Invest in what you know and in what you understand. And
so on the trading side, which of course is your background and your firm's expertise, we've seen certainly a swath of institutions entering the space. Is HFT a thing in crypto? Are people making these moment-by-moment trades? Is algorithmic trading leading the way in crypto the way it is, for instance, in the equities markets or in fixed income or in derivatives? Where do you see things today?
Yeah, 100%. And it's been here for a while. You see a lot of high frequency shops making markets, making very quick trades in Bitcoin, which I frankly view as a good thing. They provide liquidity. I know they sometimes get a bad rep because maybe they're not there all the time that you want them to be. That has not been my experience. Nonetheless, they will provide liquidity. On the flip side of that, I would say if you're a day trader in this market, don't try to go against the high frequency. It's just not going to work. So you are seeing that. We used to see a lot of arbitrage between exchanges. That has gone away mostly because it's hard to scale that up, and the exchanges, because we have more institutions and more professional investors, those prices are tighter, which again is a good thing. It's the market acting the way the market should, closing down mispricings. But yeah, there's a lot more professional investors in this space than have been made public.
It's been about a couple of years or so since the last halving. Do you believe that it's going to continue to be cyclical? The timing of this, based on the last halving, is not too dissimilar from the timing of a bull run from the halving previous. Is it going to stay this way in perpetuity? Is eventually, are things going to even out and become neutralized? What do you think?
I think things become evened out and neutralized. There's a huge debate over whether or not the halving was priced in. Of course, we'll never know, but it's following the exact pattern that the last several halvings did. And I did a study and presented it to LPs earlier this year at the halving. And we looked at it and said, okay, where are we tracking along? And we were roughly tracking along the same trajectory that the 2016 halving occurred. And that trajectory would bring Bitcoin to about 60,000 by May. And we're right on track for that, actually. So that is nice and predictable for an investor. That's good. I think as you get more investors involved in it, though, with more diverse interests, and as there starts to be other catalysts. So for example, people are using this as an inflation hedge. That can take over from a halving. And there's also something unique about this halving. This was the first time in history that on a stock to flow, and stock to flow has been a big thing. The stock to flow model is, frankly, I think it's a great thing for crypto. We needed the crypto PE ratio, and that's what stock to flow gives us. But basically what it does is measure how scarce the asset is. And up to this point in history, gold has been the most scarce asset. Now, after the halving, Bitcoin is the most scarce asset. It's beat out gold. So what does that mean going into the future? I think that means that it may act differently in 4 years at the next halving than it did this time.
Well, certainly it's a lot more omnipresent today than it's ever been before. And it seems, as you're saying, that institutional investors are already in. So what's next? Let me leave you with this last question. What's next? If we've already got big institutions putting corporate treasuries in, is there a new frontier? Are countries going to be buying Bitcoin and keeping that in their reserves? What do you think are the possibilities?
I think, so you hit the nail right on the head. So we're in this process of the corporations putting it on our treasuries, institutions putting it on their balance sheet. Why wouldn't a country with a weak currency add this to their balance sheet? It would immediately strengthen their currency, especially, the biggest problem you have with fiat currencies is once they start to deteriorate and once they start to go down, they're very hard to turn around because the reason is you're printing all this money. Well, let's say you're a country that you're defending against it, but you don't have the capital reserves to buy up your currency. Well, why not buy some Bitcoin, especially at this stage where it's only a $700-800 billion asset? You could buy $1 billion worth of Bitcoin the next day, announce that it's on your strategic reserve list. I guarantee you Bitcoin would be up a lot on that news. So eventually somebody's going to figure that out. Maybe they're listening to us, David, I don't know, and they figure it out after this. But I think that's really what, my view on the currency markets going in 21, I think we're going to have these rolling fiat currency wars, and just makes perfect sense for Bitcoin to be a part of that conversation.
All right. Well, Brian, where can people learn more about your firm, and where can they perhaps go and send you questions?
Sure. So you can go to our website, bkcm.co, not .com. We can't afford the M yet. We need Bitcoin to go much higher before we get that, but hopefully someday. But bkcm.co, you can email us there. You can call us there. And then, of course, you can see me as a Bitcoin televangelist on CNBC.
All right. Brian, thanks so much for being here. And thank you to everyone tuning in to the North American Bitcoin Conference here in virtual Miami.
Thank you, David. A lot of fun.